In 1783, a British courtroom debated the value of more than 130 human lives. The issue was not murder, it was insurance. The case arose from events that had taken place 2 years earlier aboard a British slave ship named Zong. In 1781, the vessel departed the West African coast carrying more than 440 enslaved Africans, far exceeding the number it could safely transport. Overcrowding below deck was extreme. Disease spread quickly. Sanitation was minimal. Mortality rates began to rise even before the ship reached the Atlantic crossing. The ship's captain, Luke Collingwood, had limited experience commanding such a voyage. Navigational errors soon compounded the crisis. The Zong missed Jamaica, its intended destination, prolonging the journey by weeks. As supplies dwindled, drinking water became dangerously scarce. At this point, a decision was made that would define the voyage. Under 18th century maritime insurance law, enslaved Africans were legally classified as cargo. If captives died from illness during the voyage, the financial loss fell upon the ship's owners. However, if cargo was deliberately jettisoned in order to preserve the vessel and crew during an emergency, insurers could be required to compensate the loss. In late November 1781, Collingwood ordered groups of enslaved Africans brought onto the deck and thrown overboard. Over several days, more than 130 men, women and children were deliberately drowned in the Atlantic Ocean. Contemporary records suggest that some resisted, while others, confronted with certain death, leapt into the sea themselves. The killings stopped only after heavy rainfall replenished part of the ship's water supply, a detail that would later undermine claims that the drownings had been strictly necessary to preserve life on board. When the Zong finally reached Jamaica, the ship's owners filed an insurance claim for the loss of what they described as cargo. The insurers refused payment, arguing that the captain's navigational incompetence, not unavoidable necessity, had created the shortage. The dispute resulted in the case Gregson versus Gilbert in 1783. Crucially, the proceedings did not initially frame the drownings as homicide. The central legal question was whether the destruction of enslaved Africans constituted a legitimate insurable loss under maritime law. During the hearings, human beings were discussed in the language of property valuation and contractual liability. No criminal indictment for murder was successfully pursued at that time. The court treated the matter primarily as a commercial dispute. However, news of the case reached the abolitionist Granville Sharp, who attempted to initiate criminal proceedings against those responsible. Although these efforts did not result in convictions, the exposure of the Zong Massacre galvanized elements of the growing abolition movement in Britain. The incident revealed with disturbing clarity the legal structure underpinning the transatlantic slave trade. Enslaved Africans were not recognized in British maritime law as persons with rights, but as insured commodities whose destruction could be evaluated financially. The massacre aboard the Zong was not an anomaly outside the system of the slave trade. It was made possible by that system, by laws that reduced human life to cargo, and by economic incentives that rewarded calculated loss. Today, the case remains one of the most unsettling legal episodes of the 18th century. It forces historians to confront not only the violence of the slave trade itself, but the institutional logic that allowed such violence to be argued, debated, and recorded as a matter of insurance.